Trade war. Not afraid of the outrageous challenge. A trade war is happening over the Pacific Ocean. If the perpetrator wants to fight, we will beat him out of his wits. This is the fight song from China when it comes to a U.S.-China trade war, not going quietly into the night. Joining us now, David Kelly, JPMorgan Asset Management Chief, a global strategist. We can joke about that. Yeah. But that's a very different scenario than just kind of posturing, and a different kind of China, and some harsh words overnight as well from the ambassador to the EU. Well,
it is actually a serious problem. I mean, I admit the fight song is a little funny, but there is a serious problem, because what we're seeing around the world is a growth in nationalism. And let's be clear, nationalism is a negative-sum game for the global economy. Global cooperation and integration is a positive-sum game. The more that everyone builds up tariff barriers and builds up their military might, the worse the global economy will do. So I think it's a very bad sign that we're heading down this path.
Interestingly, we were talking about soybeans, we were talking about commodities, things like that. The conversation has really shifted, perhaps because of the Huawei situation, over to tech. As practically, we'll put up a chart right now that shows what's happened to Philadelphia semiconductors, and they're the lowest they've been since like 2008, the biggest negative shift in a given day. How much of a threat is this potentially to the United States if we really do hit tech on both sides of the Pacific?
Yeah, I think it's clearly a threat, but this idea of however confrontation works out is not going to answer the question anyway. I mean, the tech war will be won or lost in our universities and in our immigration policy. It's as simple as that. We will either attract the best and brightest tech workers in the world to the United States, educate them in the United States, and build stuff here, or they will build stuff overseas. And so I think we think about this in terms of confrontation, but that's really not where the war is going to be won and lost.
But according to President Trump now, to argue that side of it, he's saying we can't win that war because there's leakage. That essentially they're taking our intellectual property. We're creating it here in our universities, and then they're taking it and incorporating it. And unless we stop that, then we will never be able to prevail.
Well, prevail is a kind of a weird concept here, because by definition, if you invent something, eventually everyone's going to copy it. Now, we should obviously negotiate to a better position in terms of, look, you will not steal this. We will, you've got to have stronger enforcement of intellectual property rights. And I think that's actually a negotiation that I think the Chinese will be willing to do quietly. But remember that they are a very nationalistic people. If you yell it at their face, nothing is worse in Chinese culture than losing face. So this is exactly the way you will not get them to compromise.
And this exactly proves it. This is China's ambassador to the EU, what I was talking about. Yeah. If the U.S. wants to fight, we will accompany that to the end. I mean, you can't get any clearer than that.
Because Chinese nationalism was born in humiliation. It was born in the humiliation of Western powers who took over Chinese ports, the Opium War back in the 1840s. Basically, the Westerners forced very unfair treaties upon the Chinese on the very issue of trade. This is at the kernel of Chinese nationalism. So why we think they would roll over in a trade dispute is crazy.
So, David, this sounds eminently reasonable. As far as I can tell, nobody on either side of the Pacific is listening to that. I mean, they are both digging in, it feels like, more and more deeply. Yes. So should we be braced, and should the markets, should investors be faced for a long, hard slog here?
Well, there's long and there's very long, because trade wars are so disastrous that eventually they burn themselves out, because they are disastrous. And I think we do need to recognize that there will be an election in the United States in less than 550 days. When that occurs, we will either get the president could get reelected, but maybe he will be less bellicose under the trade issue, knowing that he is now in his last term, and he doesn't have to appeal necessarily to his base as much. Or if somebody else gets elected president, they may well approach this with a slightly less aggressive stance.
It feels like some of the conversation was becoming, we're still complacent when it comes to trade war in terms of equities, but the market has fully priced a rate cut. So there's this weird discrepancy that's going to
it's part of the ongoing, what I regard as damage, frankly, from ultra low interest rates. There's nothing else to do with your money. So companies are earning all these profits. I mean, if you look at just the stock buybacks, they're enormous. But also individual investors, what are you going to do? You're going to put it in a 10-year treasury at 2.4%. You're going to put it in a cash account, which is barely beating inflation and probably won't, if the Fed eventually cuts rates. So I think easy money is continuing to fuel stock price increases, even though these threats are real.